Hello, everyone. Good morning. Good afternoon. Depends on where you are. I hope you've had a nice evening yesterday. And let's have a look at what we have today. I wasn't in the FACE webinar. From what you probably noticed, we would have Grega, so there was no real need for me to rush back from my son's school. And as you noticed so far today, we haven't had anything major happening. We are more or less consolidating yesterday's moves having to do with the FX world. It's not a surprise. I mean, it is to be expected. We know that FX markets are not as fast as they used to be, and we should at least be happy that we've had some volatility lately. And also keep in mind that equities didn't do much yesterday and haven't done much today so far, and that on its own prevents further moves in FX. Now the question is, what's going to happen from here? And if we start by viewing the FX side of things, we've had the Euro USD confirming a breakdown, right, from this confluence of supports at 116.64. At the same time, of course, obviously the DXY has broken higher. We've had the cable breaking down as well, right? The Euro and the cable in combination, are worth more than 2/3 of the DXY index, right? So, I mean, those two alone can exclusively, move the index. So it's not a surprise that the index is breaking higher. By the way, we did reach earlier today, almost did it yesterday, and we did it earlier today, the 38.2% fib at 94.47. We've talked about the significance of the 94.50 to 95 area. It is a first area of resistance. Now, that doesn't necessarily mean that we're going to stop here. From this point on, obviously, as long as we trade above like 93.70, the bias is bullish. Even if we come back and retest that area, there's a good chance that we're going to find more buying interest, as long as equities don't start rallying without a worry higher. As long as equities are consolidating, or even better, moving to the downside, you should expect the DXY to keep overperforming clearly. And under a risk-off environment, they should do very, very well, especially against commodity currencies. So far, as I was saying yesterday, the move lower has been rather orderly. Now, if this develops in something bigger, some kind of a mini panic sell-off or whatever, you should expect the moves to be a lot more exacerbated, and you should then expect the euro and the pound, for example, to start doing less bad against the dollar, and the baton of underperformance should pass almost exclusively to commodity currencies, exotic currencies, so on and so forth. But for the time being, the move is rather orderly, as I said. So there is not so much of a forced selling. Now, having said that, as long as we keep trading below the broken wedges, both in the case of the S&P and in the case of the Nasdaq, the path of least resistance in the short term is lower. The Nasdaq specifically, if you notice, is testing previous lows here and there at 14,800, roughly 750. Actually, now we break through that, and we really open the door for a move towards 14,000 next, right? So there's going to be decent downside following that. Same thing here with the S&P. I think there is a very good chance that we're going to see a lower low in this move that started after we got rejected the day before yesterday, and with the next downside target being at 42.50, right? So until proven otherwise in the short term, I see no reason why somebody would want to be bullish. Having said all that, as you know very well, the medium to long-term trend hasn't changed yet. A lot more has to happen, in order for something like that to be confirmed. So for the time being, you should keep your expectations and your timelines, rather conservative, right? You don't want to be all in a move that might prove to be, short-lived, right? And especially you don't want to be all in and unwilling to accept the possibility of something different happening. Now, you'll notice that the VIX has been playing out in that divergence that we had, but still, the VIX has also not exploded higher, right? So the move higher in the VIX is also orderly. So my first cue is definitely going to be VIX producing some kind of a big move north of 25, which isn't the case yet, right? Anyhow, now, Stelio, I heard you.
Hello, I'm
Hey,
here.
mate. Yeah. We've had some data before. We had US GDP, GDP deflator, initial jobless claims. Initial jobless claims came a little bit worse. GDP came as expected.
Yeah, these are not numbers that are going to move markets, no.
Yeah, because...
is Powell speaking about half an hour? That's what I see in the schedule. I'm not sure where he's speaking. Let me check. Oh, in the Joint Economic Committee. Okay. Oh, you never know.
Yeah, I doubt something. I doubt something major is going to come out of his mouth. I don't think we're going to hear something we haven't heard during the previous days. But yes, you never know. Did we have anything else?
No, we talked on Face about the dollar and how it's trying to rally. We looked at the DXY and how it's now basically at the 38.2 retracement, and we talked about how it might even get to the 50%, which is 96.10 or something like that. That would be a stretch, I think. It might, but it's about the dollar, and it's we're going through month end now, and we have the main thing, which is the debt ceiling, which they're expected. Well, not expected. Yeah, I think they are expected to raise it. There are people who are saying, "Oh, the US is going to default," and this. I mean, that's never going to happen. I don't think so. Really, the markets are a little bit nervous to see how this pans out, but it's going to be one of the same again and again. They keep raising it. They keep doing what needs to be done. And when the time comes, they pass it on to the next person, the next chair, the next president, and the bomb eventually will explode on somebody else's hands whenever.
I also don't think the US is going to default again after the 1971 default. I don't think they're going to default again because now they don't have any obstructions to the creation of money. So why default when you can repay any amount of debt with printed money, right? Now, it's a different conversation how much that money is going to end up worth, right? But why go through a default scenario with whatever that means, right? So, as long as they have the printing press, they're going to keep printing. And I do think that it's a political game. There's going to be some concessions from both sides to theoretically agree on a sustainable path forward, which of course is a joke. There is no sustainable path forward. They are already in a totally unsustainable path forward. But as long as both parties keep pretending that there is a sustainable path forward, they will just keep arguing about how to do it. In any case, yes, I think that even if we have some kind of event around the debt ceiling, is going to be something extremely temporary.
Yes, like when was it, a year ago, or I can't remember when it was. We had one, for a week or something. Remember?
Yeah,
But
I don't
anyway,
think it's going to be like the one we had under Obama, which was, more prolonged, and we had that
Yes.
downgrade.
Yes.
Yeah, I don't think they want to go over that again. So, yeah, I think even if we get something, it's going to be very, very, very short-lived. And I think the markets also more or less realize that. I don't think we're like, the only ones that understand that. So, yeah, I don't think that's going to end up being a big mover in the market. Anything else that we've had?
Nothing out of the ordinary. We got some inflation data from Germany, as expected, but still above 4%. So it's the problem is still here. We've been talking about it for ages, and no, we have the Bank of Mexico later today, expected, I think, to hike 25 basis points, but not much else. No, I mean, the market-wise, we're opening up, flat-ish in equities.
Yeah.
Cryptos are doing well. Metals are rallying after yesterday's bloodbath. And
especially silver.
Yes, and but otherwise, nothing. Nothing to report.
Okay. Now, the fact that equities are not rebounding is not positive, given the usual environment and after the sell-off. So I still think that there is a decent chance that we're going to see more downside. In any case, we said some basic things, and we're going to revisit the rest of the assets. But I think we might as well go ahead and do the bias chart before we start talking about more markets. So let's start with the euro and see what's happening here. First of all, we saw the daily picture of how the euro looks, and we've broken down from that triangle, as we said, etc. And as you see, even this recent price action during the past few hours, it still shows that the euro remains very much under pressure. Closest resistance is now this 116.10. It used to be support, so that's an easy resistance to put down. 116.10 is resistance, with the next downside target being 15.10, which is a confluence of supports actually. So 116.10 resistance, 115.10 being support. And the bias, since we're talking about short-term bias, is clearly bearish. Now, in the case of the USD Swiss, we seem to be finding resistance here at the 78.6. Although this type of price action that we have looks to me probably more of a consolidation that is likely to resolve in the direction of the prior trend, which is higher than anything else. But in any case, for the time being, since this is holding, we're going to put down 93.56 being resistance, with closest support that matters, I guess, being 93 cents, 0.93, and the bias is clearly bullish. Now, time to switch to the cable, which has also broken down, as you know. Right. I'm checking this possible channel as well. Found support exactly at the 161.8% extension of the last rebound, which is now support, and that's at 134.10. And resistance should be this consolidation area at 135.17. 135.17, with the bias being bearish. Now, let's move on to our commodity currencies, and starting from the Aussie, which has been rebounding a little bit during the past half day, let's say, but I don't read it anything really bullish in this rebound. 72.25 being the closest area of resistance, and this recent low at 71.70 being support. Below that, we have the 71 area as an important support, right? But since we're rebounding a little bit, I'm going to put that low, the 71.70 for the time being, as nearest support. But keep in mind, 71 is a more important support. It's just lower, but it's a more important. You can also see it on the daily chart how important it is. Now you can clearly see in the case of the Kiwi, in a more obvious way, why I think that this is some kind, the one we saw in Aussie, is some kind of a probably bearish consolidation, right? It looks a lot better, forming as a bear flag here in the Kiwi, with next downside support being at 68.05. I know you can see, by the way, the bias chart. I'm going to show it to you once I'm done. It's on another screen. And 69.35 being resistance. As I said, in my opinion, probably a bear flag here. So, don't be surprised when you see it break down. I think the chances are strongly in favor of that kind of a development. And somebody can say that the exact opposite thing is happening here in the case of the USD CAD, right? Likely small bull flag. There you go, right? In any case, let's see. 27.75, 127.75 resistance. We break through that high. We are targeting next 128.70, right? So it opens at 100 pips of upside, and closest support is the channel trendline support, currently passing from 126.25. 126.25. You can be bullish above it, and that's why I'm going to designate this as bullish. And clearly, I didn't mention it before, I've also switched Kiwi to bearish. Now, just clarifying once again, I'm talking about short-term biases, right? Because look at the Aussie, look at the Kiwi, for example. I think that if we're talking about medium-term trends, they're currently neutral, correcting their prior gains. I think we're going to resume higher. But since the bias chart is something we produce on a daily basis, I'm determining the bias on a more of an intraday basis, right? So it's not that I've switched my point of view and I'm suddenly like bullish the dollar across the board. I'm bullish the dollar across the board in a very short-term horizon. I just want to, clarify that. Now, USD-MXN, we've already mentioned how it has broken out, and look at it creating another consolidation, probably some kind of a bull flag. Also here, there it is. My lazy cat doesn't want to go around, and she wants to complain. Okay, so clearly above the broken triangle trend line resistance, let's say 2025 currently. 2025, which I'm going to designate as support, we should be bullish, with the next upside target being that high over there at 2075. USD NOK, where are you hiding? There you are. My God, I'm gonna. Come on, έλα, τελείων. Μπράβο. Lazy. Okay, so for the time being, this can be an expanding triangle. Look how perfectly we got rejected from it. So yet another bearish consolidation. As you understand, the line in the sand now is like this confluence, right, of this triangle straight line resistance and the 50% fib at 883. 883 being resistance and closest support being at 868. Not an important one, but intraday, right? It should do the job, and I'm keeping this as neutral intraday for the obvious reasons that you just saw. Now, our precious metals, which have become a little bit less precious during the past few months, monitoring this as a possible descending wedge with support being at 1722 in gold and resistance currently being at 1761. Now, I'm torn if I should have the bias here as neutral or bearish in the very short term. Let's say it's bearish for the time being. And silver, undeniably bearish, as long as we trade below this broken symmetrical triangle trend line support. I know we've been rebounding a little bit, but as long as we trade below it, we should maintain a bearish bias with resistance clearly being the previous support area of 22 and the next downside target being 21. Very simple and straightforward. Having to do with Bitcoin, nothing really major happening here. Still an orderly move lower. Now somebody can focus even more to the short-term picture and see here a symmetrical triangle, which, has a higher chance of getting resolved to the downside. So yeah, you might as well do that as also. But in any case, let's put resistance at this trend line resistance at 44,700. 44,700 with support being clearly at 40,700. 40,700. Nice. Let's move to the yen and the DXY. So here's the USD yen, another consolidation after breaking through the pennant yesterday. We came extremely close to the 112.20 resistance area, which remains an important resistance. It's a previous multi-month high, right? There you go. Actually, yeah, more than a year, 1.5 year old high. So 112.20 being resistance and support at 111.20. DXY, previous resistance at 93.70 should be support from this point on. Very clear. And next upside target being here, this confluence of resistances, 161.8% extension of the last pullback and horizontal support resistance area at 94.83. And last, but definitely not least, the S&P. Likely some kind of a pennant, flag, whatever, forming here with clear implications, resistance 44.01, support 43.46, bearish in the short term, And Stelio, I think this is it.
Hold on, let me grab it. And done.
Nice. I'm going to leave it for a few more seconds up here.
I'm putting it onto the chat room as we speak. And we go. Nice.
Okay, cool. So that's
doing?
done.
Yeah, market's pretty flat in equities. The dollar still around 116. Yep. Okay.
A
Yields.
little bit of a pullback
Yeah.
in the dollar, which is to be expected. Yields higher on the day.
Marginally, yeah. So what's the next big thing we're expecting now? If we go from one event to the next, well, what is it, do you think?
I don't know, bro.
The Fed, right? The Fed, when is it? There's, hold on. Let's see. Calendars. Okay, 26th.
The question is
3rd of November. 3rd of November. So we have a month to go.
Yeah, what is the market going to value as important? Based on outcome, because we might have, let's say, Fed giving us nothing, right, and the market doing nothing.
Well, the Fed has told us that what they're looking at now is employment, because inflation is there. So really, payrolls is again going to be important, but we go from one event to the next.
The Fed is going to constantly keep looking at targeting whatever they haven't quote unquote achieved,
yeah,
because obviously they know very, very well that they don't want to taper, which they will taper, but they don't want to taper. They definitely don't want to hike rates. Ideally, they would want to keep doing, QE infinity and keep rates at zero indefinitely, because they don't want to see what's coming once they try to reverse policy, as it happened the previous time. Yeah. Michael is asking, hi Steve, copper please, wondering if you think it will stay correlated to equities or decoupled due to projected demand. Also, if there is time, platinum please. Yeah, absolutely. First of all, yes, copper is pulling back in a very orderly manner. And yes, as long as equities remain under pressure, that is definitely creating a clear headwind for copper, right? Because copper is correlated with, the health of the economy and growth and so on and so forth. But I also do believe that copper is going to continue doing very, very well. There are going to be periods that's going to be consolidating its gains or even pulling back. But I do think that this move higher was clearly impulsive. This move lower is clearly corrective so far. And I think that, we might find support close to 380 and continue to the upside for levels north of $5. That's what I think. So I would definitely not be bearish or be shorting copper. That's what I think. And yeah, demand issues are always very, very important, right? And at the end of the day, the demand supply equilibrium is going to be, for any commodity, the biggest indicator of price, the biggest determining factor of price. By the way, still we have Chicago PMIs in 40 seconds.
30 seconds, yep. Yeah, you're right.
Yeah, forecasted to be at 65, with the previous one being at 66.8. So there is a pullback forecasted. Let's see what we actually do get.
Yeah. Anything else we had today? No, GDP we talked about. We actually got the UK GDP, which came in quite a bit better than expected. So quarter on quarter, 5.5% versus 4.8 expected, and year on year, 23.6% year on year. You know, if we hadn't known what's happened the last 2 years, if you saw that number, you would go, "What the hell is happening in the world?" But yeah, okay. So Chicago PMI,
worse than expected, but 64.7.
Yeah, it's close enough though.
Yeah, I know. Yes, it's not going to move the markets. We totally agree on that. Now, our friend Michael also asked about platinum. So platinum, look at it respecting once again this descending channel by getting rejected last week from the channel's trendline resistance. And as long as that's the case, we do remain in a pullback. In my opinion, this is going to prove to be a corrective pullback. Now, we might see lower lows and the move towards like 860, 870, 850. But in my opinion, we're getting closer to a buying opportunity in platinum than anything else. I strongly believe in that. And in general, this applies to the rest of the metals, in my opinion. In my opinion, gold, silver, platinum, etc., they've already run probably the biggest part of this corrective pullback. Now, I can't time it exactly, but I feel very, very confident that we've already seen the majority of the corrective move lower already taking place. So in my opinion, it's a matter of time before we continue higher. Feel the same and looking to enter, says Michael. Yeah, I think this is the proper approach looking at this market, both fundamentally and technically. I have the same opinion. Let's see what else. Crude oil pulling back even further today. I wouldn't read too much into it. As I've said before, in my opinion, as long as we trade above 70, there is no real reason to be bearish, right? Now you'll notice that once again, natural gas seems to be trying to recover. Yes, we did have a very nasty evening star formation forming, and we might as well get a deeper corrective move lower. I still don't think there is a proper risk reward to be buying natural gas yet. I think we might need to see more of a pullback in this case. But as you see, it is making an attempt to recover even today. In my opinion, if I was a very short-term trader, I would be selling rebounds like the one we're seeing today. I would be more inclined to be selling it if I was like an intraday trader, I repeat. Right. So here's the 4-hour chart, for example. I would be more inclined to sell, right, to catch more downside before this turns decisively higher again. Okay. Just my 50 cents. My pleasure, Michael. Good morning, Raz. No, Stel didn't ditch me again. As you see, he's here. I just saw your message. So what else was there to say? Yes, cryptocurrencies. Cryptocurrencies seem to be trying to rebound today, but keep in mind, as long as we trade within these formations, I don't really see or read much into this move. Now, admittedly, the pullback is orderly. And it tells me that there is a good chance that we can break to the upside and continue higher, right? I have to say that much. But there is a chance that, we're just consolidating and we're going to be continuing lower. And as I've told you before, I doubt it that equities selling off strongly, if that is about to happen, is going to permit cryptocurrencies to rally. I think they're going to roll over and dive lower if that happens. So as I was saying, and I insist on that, it is somewhat easy for cryptocurrencies to be rallying as long as equities are flat. But for example, you see sell-off pressures and you see like indices being like 1-2% lower on the day, you should expect cryptocurrencies to pare back their gains, and in my opinion, probably turn strongly negative as well. So as long as we are in this environment in equities, I would be extremely skeptical in buying cryptocurrencies here. Keep that in mind. Anything else I can answer for you guys, girls, ladies, gents? Anything else on your mind that you want us to look at? So where will traders and investors go? Cash if we drop. The usual rotation is cash and very short-term bonds, like T-bills, right? That's the most common rotation that you should expect, right? So people buying like 3-month US debt or something like that, right? Which you don't care about anything. You don't care about you don't care about inflation because it's very, very short term. You don't care about bond price movement because you can simply hold to maturity, and after 3 months you have to be paid in full. So yeah, cash and short-term debt is sovereign debt is what you should expect people to rotate into if we get a disorderly sell-off. Steve, did you cover NDX or IWO? Apologies if you... No, I didn't. So here's IWO, right? A big fat zero happening here. I'm still viewing this, and we drew that quite some time ago. It's been playing out nicely. I still view this as some kind of a corrective consolidation after a, just amazing vertical move higher. This market needed to correct either in price or in time, and it's doing it so more in time, right? So in my opinion, you want to be bullish. This it totally makes sense, but in my opinion, you need to, let me actually open this. You need to be very, very patient, right? Because it might need even more time. It might need weeks or even months for it to break to the upside, right? For the time being, I would do absolutely nothing with it. Now, having to do with the Nasdaq, I temporarily showed it before, saying that this is soft support, like 14,750, and I also said that we break through that, we should target 14,000 next. So yeah, I think the path of least resistance in the short term is lower, right? We've seen enough to believe that there is a good chance that we're going to see more of a pullback before we can continue higher. Now, I don't think anything has changed medium to long term. I think this is just a corrective move lower. So, my time frame for saying I would be bearish is, once again, I need to stress out short term. Yeah, I think it has room to move lower towards 14,000. And of course, we move lower towards 14,000, we will then have to analyze the structure of the move lower to determine if we should expect even more, right? Because it's not about the levels, it's about also how you achieve these levels, how you get there. Anything else?
All right, thank you, Steve.
Thank you, Stel. Thank you, everybody. As always, if you need something, mention me in the chat room. Otherwise, in what is it, 2.5 hours roughly, I'm going to be with you on the daily roundup, and we can go over any questions you might have then. Bye bye.
See
See you
you,
then.
everybody. Bye bye.